Hi, everyone. Thanks for tuning in to episode 11 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing with ALN Apartment Data, and I'm joined by the star of the show, Jordan Brooks, Senior Market Analyst. Jordan, how are you?
I'm doing great, Patrick. How about you?
I'm doing well. This year, ALN is celebrating our 30th anniversary, and we, again, want to thank all of our employees, our clients, and all of our friends for their support over the years. We also wrote a little bit about that over on our blog. You can check that out over at alndata.com/blog. And as you might be able to notice, I am back in the office. There's signs of life out there everywhere. The sun's shining, the traffic is blooming. And that's actually my segue into the article that you wrote, which is called "Urban Multifamily Back from the Dead." It's right there in the title. You mentioned it throughout the article, the word urban, and also throughout the article is suburban and outlying designations. Take a second to explain how ALN defines those terms for us, would you?
Sure, and I love the segue, so well done there. Basically, ALN divides every metropolitan statistical area, MSA, into urban, suburban, or outlying regions, depending on the population density per square mile. And not every MSA will necessarily have all three of those designations, but we have population density thresholds for each of those three, and then we group areas according to those. So that's kind of how we define those.
Well, your headline of the newsletter article specifically refers to the urban areas, and we've heard a lot over the last year or more about the struggles of cities and urban areas. What has the recovery really looked like, and how widespread is that recovery?
Well, so far this year, the kind of the big headline with regard to urban areas specifically was the reemergence of apartment demand. So obviously, the 2021 numbers across the board are going to compare favorably to 2020 when we're talking about January through May. By May, we already had 6 weeks or so of COVID impact on the numbers. But we spent some time in the newsletter going back to 2019 as well to compare kind of the pre-COVID situation to what we're seeing this year. And for urban areas, when we look at net absorption is up about 40% this year compared to the same portion of 2019. So we've seen not only a rebound in demand, but demand far exceeding even the pre-COVID levels. And that's translated also into occupancy growth, about percent up in terms of average occupancy for urban areas generally as a group. And then rent growth has also been very strong, almost 4% through May. So we've really seen this resurgence in demand propelling the other metrics that we look at forward. And of course, I should also mention too, part of that rent growth has been we've seen pretty significant decreases in the availability of lease concessions in urban areas as well, down about almost 20% through May. So we're kind of seeing a little bit of a return to normalcy in terms of discount availability and kind of market conditions in general.
There really does seem to be a lot of signs of life out there. How are the suburban and outlying areas faring? Are they having a strong year as well?
They are, and interestingly, the title mentions urban areas, and really that was because urban areas had the toughest year in 2020, and so the bounce back this year has been more dramatic compared to what we saw in 2020. But just in terms of kind of raw numbers, the suburban areas are actually continuing to do as well or slightly better even than the urban areas. So we've seen demand about 25% higher than in 2019 through May for suburban regions. So not quite to the 40% level of the urban areas, but still quite strong. And the rent growth has been basically equal to the urban areas, almost 4% rent growth through May. So it's not as if the areas that did better last year, the suburban and the outlying areas, have kind of receded this year, and the urban areas have taken advantage. We're really seeing kind of the tide raising all boats, and it's been most dramatic in the urban areas, as I said, just because of the comparisons to what we saw last year. But the suburban areas and even the outlying areas have really had a strong 2021 so far.
Well, it'll be really interesting to see how the rest of the year plays out for that, and we look forward to your articles, going over all of that in the coming months. What else do you have coming up for us?
Well, I'll be speaking virtually at the Arizona Multi-Housing Association conference on July 16th. I believe that's at noon Pacific time. So viewers of this can look on our social media and elsewhere for more details on that if that's an area that's relevant to them. And then other than that, we've got some more content coming up on the blog. We're going to kind of continue to sift through what's going on this year and how things are changing compared to what we saw last year with the rocky 2020, and really just kind of digging in, looking at some individual markets and trying to parse what's going on specifically with lease concessions and some topics like that. So be sure to check out our blog. That's at alndata.com/blog, and we'll have lots of great content going up.
Yeah, you can't miss any of this stuff, especially if you sign up for our free newsletter, which you can do at alndata.com. You can also follow us on social media. Just look for on Twitter, it's ALN APT Data, or just look for ALN Apartment Data on Facebook and LinkedIn. Don't miss any episodes of Takeaways or any of our other content. You can subscribe on YouTube. Just click that button that just came up. And we look forward to seeing you then. Jordan, thank you so much for your time. Happy summer to you. It's nice to see some signs of life, and it's great chatting with you today.
You as well, Patrick. See you next month.
See ya.